All right, guys, good afternoon. Welcome aboard to the aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. No baby right now, baby's gone. So at least I can put my full focus here into the video. Welcome aboard again, 5 p.m. Eastern Standard Time, aftermarket recap. Let's rock and roll. The Dow was down or closed down 228 points, NASDAQ down 1.87%. We talked about the NASDAQ and that head and shoulders formation. Pretty much played out the way we expected. I expected a little more downside, but again, still nice all around. S&P down 1.15% this afternoon. Let me make sure my audio is on. Okay, audio is on. Good. Volatility index, the VIX up 5.69%. We'll chart that here together. Equal weight S&P down 0.78%. IWM small caps down 0.62%, 179.33. Dollar index was higher, 0.70%, 107.22. 10-year yields did fall 2.787%. TLT was bid today softly, 117.48. High yield credit did fall, but not as much as the NASDAQ, down 0.70%. Investment grade bonds down 0.02%, so relatively flat, kind of like TLT. Crude oil futures, 95.54. Let's go ahead and just kind of walk through everything as we go, make life easy. Crude oil, again, kind of hover around that 95 level. 98.71 is your resistance short term due to the Fibonacci level. Support looking at around $90 a barrel. Why is that $90 a barrel? Well, actually, that's the Fibonacci retracement pre-Putin invasion by Russia to Ukraine. We are bouncing off the 200-day on the daily. So again, that looks to be a support level. But the more we knock on it, guys, the more likely we're going to fall. So maybe we're going to get crude oil to hit 90, and I get to add to my Chevron position as we go forward. So again, I'm kind of looking forward to it. So if the dollar gets stronger or gets firmer, we'll probably expect oil to hit 90 relatively soon. So again, we keep testing that 200-day with wicks, keep bouncing. And again, unless you want to call this a quadruple, quintuple bottom, that's not the case. You're more likely going to go lower on crude oil. Gasoline futures, $3.09, down 0.57%. Kind of very similar to gasoline, to crude oil. Again, we tested the 200-day. We stayed above it today. But again, we do have a gap to fill to the upside right around $3.24. Maybe we fill that and then we get back down to 295, which is your 200-day. And again, I do expect that to break as well. So expect for gasoline, unleaded gasoline futures to get to around 2.8 if that's the case. In terms of longer term, what we're looking at, I mean, 285 seems to be the base case. If we get a little more fault, that would retrace the whole Russian invasion boost, get us back down to $2.85. Again, if we get a firmer dollar. If we do break that, then we have us down as $2.29, which we haven't seen gas prices that low since just last October. So again, let's see what gasoline does. Let's see what crude oil does. Crude oil has that 50-day on the weekly right at 91.23. Again, 90.20 being my support there on the Fibonacci level. If we get a little lower, maybe $83 a barrel, kind of the same level as gasoline futures, the lowest level since October. That's kind of what I'm expecting. Again, I want to go ahead and add oil stocks as I go down. If we go lower, because I want to more likely I want to call dollar cost average some energy because again, we are in a bear market technically, way more of a bear market in terms of crude oil. So again, just like as fast as we can go high is as fast as we can go low and snap back. So again, we're kind of finding out what the mean reversion is. So again, if we go based on just the weekly chart, again, your average last 100 weeks or last 100-day moving average, excuse me, will probably be around 73.56. That kind of gets us back to July levels of last year. That makes a lot of sense. I wouldn't be surprised if we do get there. I don't think it hangs around there too long. Again, the only thing I expect is the Fed to cut rates in the future. Morgan Stanley put that note out weeks ago that they were already pricing in Q1 cuts. That's when I think commodities will bounce as the dollar's going to get a little softer if we get a recession. Again, if we get a recession and you're hoping for monetary policy to open up, you're kind of rooting for the worst case scenario because that's when the Fed will pivot very quickly to kind of cut to keep a recession from going into a depression. So again, what's more important here? I know we have price stability, we have commodities going down. We don't have a CPI number yet for August. but we will. So once we see that we get a little bit of a drop, that gives the Fed a little bit of leeway just in case things get out of hand, turns a recession turns into something more severe. They'll just cut, and that's been something they've been doing now for a while. If you remember 2009, if you guys remember 2018, 19, that was the last time we had some Fed tightening. And again, 2020, we had a recession. First thing they do, they start cutting rates. So the first sign of trouble, they're ready to rock. And again, I mean, I'm basing this not on the academia side, but more of the pressures, either just in terms of their jobs politically. It's going to happen. That just happens. I think they should just keep raising rates until inflation is absolutely slayed. Again, if a recession comes, a recession comes. But again, recessions actually heal inflationary pressures because you are by definition, with a recession, contracting the economy and dropping demand. With no demand, prices go down, just like anything else, whether it's sneakers, a hot dog, a house, or a shirt. If no one is buying, prices are going down. That's how the stock market works. If no one's buying stock A, prices are going to go down until someone finds value at that price. That's pretty much how it works. In terms of gold, remember we were talking about that level looking around 1672. So again, that's still my level I'm looking for support. I have my alert there. Let's see if we get there. We do have the Fed tomorrow. Again, I expect 75 basis points tomorrow anyways. The real thing we're watching for in terms of the Fed is if any kind of hint of a pivot or pause or slowing down of rate hikes. Again, they have gone from 25 to 50 to 75. And again, now the 100 is off the table, but 75 again is what we'll get. We got 75 last time. So that's pretty much baked into the market already. Again, now we're just waiting for any kind of, um, I guess, any kind of hint of a pivot in the in terms of Fed policy as we move forward. Let's kind of keep it moving here. Bitcoin, 21,000, obviously with tech, runs with tech. We know that. That's when I knew tech was going to go down today on Qs on those puts because Bitcoin was kind of giving us the hint. When Bitcoin goes down, Qs are going to underperform. And when Qs go higher, NASDAQ, Bitcoin's going to go higher. Name of the game. It's an analog of the NASDAQ that's higher beta. That's pretty much it. Pretty much it. Ethereum, 7.85%, 1378 currently. Copper up 1% today, 3.39%. I kind of like to look at copper as a good recession indicator. If copper is still in demand, that means that things are being made. Again, kind of like lumber and everything else. So if that demand for those commodities or prices go down, that really means consumption is down. Because regardless if you need diapers or you need milk or you need lumber or you need a car, you're going to pay whatever it takes. Again, it just depends on how bad you need it, right? That's kind of how pricing power works in our capitalist system. Let's go ahead and bring up that QQQ inverse head and shoulders that we talked about. It did hit as high as 80% on a runner. I closed it for 30% profit. It did hit 40 right after. We kind of hovered around the 200-day. But again, this green arrow was telling us where we were going. Again, you have your shoulder, head, shoulder, and continue to go down. Now we're looking at the market saying, okay, what levels were tested here? Let's go ahead and take a look at the daily on Qs. We still have the 50-day moving average, 292.77. Maybe that gets tagged, which is fine. Again, what we do after we tag that moving average will tell us a lot. Again, it's still above the 20, which again kind of tells us the trend that we're heading to. So back to Qs on the hourly. We did get some earnings today, so I'm going to go over that here in a second. Nice boost to the end of the day when earnings just hit the tape, Google, Microsoft, and all those names. And you can see kind of coming down a little bit. If we can get above 297.38, that's the 200-day. Let's see if that does hold. But really, for me, if we can retest this last breakdown of 299.68, I definitely want to go ahead and buy and target 304, which is the top part of that right shoulder. And again, we'll just do it over again, right? Kind of the same old deal. Another way you can look at it too is if you have this left shoulder possibly building, and then you have a head inversely. So if we test 299.68, maybe we pull back a little bit and then we zoom higher. Again, technically speaking, that would make sense. But again, we have a big event tomorrow being the Federal Reserve Open Market Committee, the rate decision. So that was really the only trade I had in terms of the market. I did have some unusual options activity on Ford, on puts. Right now, it is up after hours. I bought the 12.5 puts for August 26th. They had tons of volume. So again, I'm holding those still. There was some news regarding the Bronco having some maintenance malfunctions. We'll see if they talk about it on the call. The earnings report is tomorrow. And I also had some Alibaba unusual options activity. I know, a tough one to trade. Trust me, not everyone likes it. 68,000 in vol on the 105 calls. Interesting enough, one of our masterclass students told me about it. Who he was telling me, he was saying it's interesting how the stock was kind of waffling, Alibaba, and kind of going down, but yet the premiums were higher. So again, it just shows that much demand in those contracts. I have them for this week. Again, that's an unusual options activity. Very simple how I do it, guys. It doesn't take a lot of magic. You just go to your option scanner, you put 10,000 minimum of all, and then you could see here at the top of the list, Alibaba with 68,000 contracts traded in volume. So again, it's not as simple as just picking one out of the hat. You're gonna have to do the charts and do the work as well. But again, I know there's a lot of other services out there in terms of like flow algos and kind of those black box where they tell you all this stuff. Yeah, those are a little more detailed, but again, those are just numbers. Again, they're just telling you, hey, this is what it's out there. Our service is a little different. We're a little more hands-on, a little more full service, where we give you the chart on why we're getting in and why we're getting out in kind of the macro sense. So if you're one of those traders that just likes data and you like to look for this stuff yourself, take a look at the options hacker under the scan tab on Thinkorswim. It's a great tool I've used. Again, not every unusual options activity needs to be traded. Not every high volume stock needs to be traded. But again, it gives you a nice breakdown of a list of a couple of names that you could use moving forward to kind of put on your trading plan. And that's kind of the way I do things. Let's go ahead and bring up Microsoft because it did bounce after hours. It went down to 242.99, got as high as 254. We're now at 251, about 90 cents off today's close. So the reason I talk about Microsoft, because Microsoft posted its slowest sales growth since 2020 on the strong dollar. Remember, they pre-announced regarding the strong dollar. And then if I can get the actual numbers here for Microsoft, let's go ahead and get it. Microsoft had a $2.23 EPS on Q4. This is their Q4. $2.29 estimate. So that's a miss on EPS. $51.9 billion revenue. 52.3 billion was expected. So again, a miss on the top and bottom line. That does not happen often. Google reported their earnings, $1.21. They missed expectations of $1.32. 69.69 billion, missing expectations of literally $70 billion, about $1 million away from the estimate. So at least give Google a credit for honesty for being that close. Why is Microsoft after hours? I haven't heard the conference call. Again, I'm kind of watching the price action here. I'll start reading into it. If I see anything that stands out, I'll put it on Twitter. Trading at 251. Again, not a great number at all in terms of Microsoft. Again, Xbox hardware revenue decreased 11% year over year. Microsoft not seeing weakening in big corporate deals. That's some good numbers there. The Azure growth was 1% lower than expected. Again, that's going to hit the actual numbers as well. And their intelligent cloud revenue was below expectations, 20.91 billion versus 21.07 billion. So again, I would expect Microsoft to be trading at that 243 level. So this is why the reason I didn't want to buy so many stocks, especially as we were going higher, because again, we need those multiples, the price to earnings multiples that I talk about constantly. Those numbers need to be reset. So we missed estimates. I haven't got the forecast yet. So the forecasting will tell us a lot. That'll give us the forward price to earnings multiple. So right now, I think Microsoft is trading at a 27 times. The stock market S&P total trades at 17. So you're paying 10 more per share, $10 more per share for Microsoft. Does it trade at a premium? Yes. Do they deserve to be at a premium? I think so. Maybe not at a 10. But again, with these earnings, do these earnings make the stock more expensive? And that's why the stock is, well, off their lows. But again, I haven't read their guidance yet. So still a lot to be seen. Let's go and take a look at Google. Google's numbers missed again. Kind of went over their Q2 cloud revenue, 6.28 billion. They were up 37%, but year over year, but they were down, missed on expectations. Let's see, Google. Google, this is the reason Google is higher. Let's just make this easy because they miss on the top and bottom line. I went over that. But their Q4 ad spend, 56.29 billion, they beat the expectations of 55.91 billion. This is the reason why Snapchat went the way it did. Was ad revenue, slowing ad revenue. This is what Google does. This is what their bread and butter is. Yes, I know YouTube is great. I use it all the time, but again, that's not their meat of their company. It's ad revenue. Again, our company's investing on advertising to bring in more customers. And again, Google is saying with their Q2 ad revenue, it is a beat. That's why the stock is higher. That's really the only thing you could say out of that because of the simple fact that it was a miss on the top and bottom line. So I don't think Google's a bad company. I think they're great, trading at 108 now. We talked about that this morning, that maybe we have that gap to 97.79, but we are bouncing about $3 after hours. That is helping QQQ, obviously, a little bounce here on NASDAQ futures, and we're getting a bounce on S&P futures. Let's go ahead and go to S&P futures. Can bounce off that 200-day. Let's see if we can get to 39.64. If we do, then I want to go ahead and go long at least to 4,000. 4,000 looks to be that key pivot point for the S&P futures, possibly a gamma squeeze level. So that remains to be seen. So tons of stuff happening. Let's answer some questions. Markets have been shot up the past 3 Fed rate hike meetings. Day of them dumps the day after, news settles in. What will happen 4 straight times? Well, recency bias. That's what we always have as human beings. I expected this kind of price action we had today to happen tomorrow. So maybe we got that front end run with that Walmart lowering of their guidance. So that's kind of the big mover in the market as Walmart was down like 9% today. Again, this is a blue chip company, largest retail company in the United States, right? Largest retailer. Again, if they're giving warnings, how bad is it out there? So again, that's where, again, with the Fed, I'm kind of concerned with that they may pivot. If they do, great. That means we stay bullish because they're going to make more money. They're going to print because inflation is done. And they're going to be more stimulative because now we're talking recession. So if we have a recession, that's more than likely the Fed is going to cut rates. So don't be surprised when we actually get recession, the actual official recession, 2 consecutive quarters of GDP negative growth, you got to run up higher because it's the Fed. The Fed is the most important. They're the ones with the money. Think of them as the casino, the house in a casino. But again, will we get another shot higher? Let's get this. If we break 39.64 tomorrow, man, I think we do go higher to 4,000. But that's a little bit of a trek ahead. Let's see. Looks like they could benefit of Palantir partnership. Google pulled the trigger already. Yep. Listen, I love me some Palantir. I can't wait to hear their earnings as well. But Google, again, not the best quarter. I mean, if I could be completely honest, and I said this on Twitter, really the 2 best quarters, other than Coca-Cola. I mean, I just think they're expensive, but Visa and American Express knocked it out of the park. Visa had a 33% profit growth in this environment. Again, recession and all this stuff. People are spending. Now, before anyone says, oh, they're maxing out their credit cards, Carlos, Visa is not a credit card company. Visa is a is a card processor. So again, you also have debit cards. We heard from Brian Moynihan from Bank of America who said the consumer is strong. The consumer balance sheets are better than 2021, meaning they have more money in their account, and that consumer credit has ticked higher, but not unstable, and that the consumer, because of home equity, has a lot of dry powder. His words, not mine. So again, kind of interesting when I read a lot of news articles and analysts that are saying recession is already priced in, but the consumer is spending like it's all good. So who do we believe here? That's kind of the forces we're pulling. And I think, obviously the Fed is watching that as well. It's like, well, shit, man, are people buying and people spending? Then, we need to raise rates, obviously. Or is it really that bad out there and we're screwed? We better get in front of this. That's kind of the debate the Fed is having. I'm just glad I'm not a Fed governor. Can you check a Visa volume on the 232.50 calls? Sure. Let's take a look at Visa 232.50s. 232.50s, 5,423. Visa is now $2.11 after hours, so they are down after hours. They popped to 220 and it fell back down. Let's see what they say, George, on the conference call. But again, it was an excellent quarter. If this is where you're going with Visa, I think it's a buying opportunity because it was a really great quarter. The only problem is that now on a technical basis, all we're doing is rejecting the downside. We do have a gap to fill to 205.85. I mean, AXP, let's take a look at that. And you could see that big pop after earnings kind of retraced down too. But again, good company to own. Let's see if we can retest possibly 143.26, and I might have to pull the trigger on good old Amex, uh, being one of the better credit card processors and one of the better financials out there. So that's where we are. Appreciate your time, George. Thank you so much. Have a great rest of your afternoon. I will catch you guys tomorrow for the morning notes. Big Fed day, so let's see what we get. Ready to rock. Kind of quiet today. I know in terms of the market, kind of a slow meltdown. We had QQQ. Well done, team. But again, all we had is one trade so far. We keep it very close to the chest because we had a really great last 4 weeks, 3 weeks. So we kind of keep that momentum going, not give anything back. So great trade on Qs. And we're going to keep an eye on Ford and Alibaba. Calls tomorrow. Let's see it. Let's see if we can get to 39.64, man. We are holding that 50-day on the daily. So very interesting stuff ahead. Have a good one, guys. We'll see you tomorrow, 9 a.m. for the morning note. Cheers.